Welcome to the Multifamily Zone, where business meets family. We explore what the entrepreneur life looks like from the family perspective. Now here are your hosts, Julia and Gino Barbaro.
Hey everyone, this is Julia Barbaro, host of the Multifamily Zone podcast. I'm here with my co-host, my husband, and the co-founder of Jake and Gino, Gino Barbaro.
I am my co-host,
Yes.
Not the co-host. I like that, baby. How you doing?
I'm good.
That's good.
Yeah.
I've got a great guest today, Julia. I've known this guest for a couple of years. We started out a few years ago getting into the education space. He's grown a ton. I just learned that he's on his second fund. Name is Kevin Bupp. He's the founder and CEO of Sunrise Capital Investors, which invests in mobile home parks, parking lots, apartments, offices, and single-family homes all across the U.S. He has 16 years of experience in educating investors to locate, acquire, and create higher than average returns from the widely misunderstood niche of mobile home park investing. He shares his experience through the Mobile Home Academy and also as the host of the Real Estate Investing for Cash Flow podcast, which has become one of the hottest real estate podcasts on iTunes. Without further ado, Mr. Kevin Bupp, how are you?
Kevin.
Guys, I'm doing great. So excited to be here. Thanks for having me on.
Well, let's start out with your experience. I mean, let's start out. We love when spouses work together. And from what I hear, you and your spouse had a little butting of heads, got a little business going on, and it didn't work. So talk about your experience getting into the real estate. And what you said I really loved was when you were struggling, your wife really helped you out.
Yeah.
And maybe she wasn't working with you, but she was working beside you. So let's dive into that a little bit.
Yeah, no, absolutely. And so I met my wife, years after I had got started in the real estate space. And I bought my first property back in 2000. So I was getting out of school. I was 21 years old, and was living up in Pennsylvania, and decided I need to get out of the cold, and was either going to go out to the mountains out in Colorado because I love Denver, I love the sun. You get 300 days of sunshine a year, and you got the mountains and everything that has to do with the mountains there. And but I also love the water, I love the ocean. And Florida was always a not necessarily a runner-up, but it was a equal option. And so here we are in Florida. Nearly 20 years later, moved down to the Tampa Bay area and fell in love with it, and been here ever since. And so actually, my wife and we met in 2008, literally when the world was essentially ending for everyone that was a real estate investor at that point in time. And she actually has a background in finance. She went to University of Florida, has a finance degree. When I met her, she was in commercial lending, focusing on hotel and large retail developments. And so we had a lot in common. At that point in time, my business was at a stage to where I knew there was pressure. There was a lot of stress going on. I just met this beautiful girl that I felt was very special, and I had been looking for a number of years for that right partner. And I just had a feeling. I had a feeling that she was the one. And we were about 3 months into our dating. And I knew it was going to happen. And as far as I knew we were going to be together, but I also knew that my real estate, what was present to her at that point in time, as far as like what was happening with me and the things I had, was about to all go away. And it was a very weird time because 3 months into a relationship, you typically don't disclose these types of things, right? I mean, everything seemed so great on the outside, and I didn't want to mislead her. And so I remember the day we were riding our bikes at a place down the beach, and we were riding our bikes down the road, and I don't think she received it the way I expected or even processed it, but I simply said, I'm about to default on a lot of loans. I can't manage it anymore. Like it's to the point to where it's going to get pretty bad. And all she said was, "You'll figure it out."
Oh gosh.
I expected her to get scared, to freak out. She said, "You'll figure it out."
That's the worst thing that she can say. My wife would say the same thing.
I would say that. That's awesome. Your wife sounds awesome. Okay.
I appreciate the compliment, but I'm not sure. It's that easy. So, long story short, the years, the 2 years thereafter, the months that followed, what have you, were very, very, very challenging. And it only seemed to get worse. Things started changing with her as well. Her bank got taken over by the FDIC in 2009, which basically was just not a fun experience for her. All of her clients were in default. And I mean, it was just a very messy time for everyone. And And I'd say that she really became like my rock. I mean, I didn't know what I was going to do. I mean, I literally went from having, perfect credit and lots of money in the bank and lots of opportunity at hand and just, a growing business to a 450 credit score, creditors knocking on the door every day, getting served with lawsuits. It was just a very, very ugly time. And I surely wouldn't have got through that period of time if it wasn't for her love and her support.
So I'm gonna turn this into like a little business now, 'cause my wife always hates when
Yeah.
I do this. But what mistakes did you make at that '08 when you saw that coming? You have the perfect credit score, you've got the great business. Were you buying cash flowing assets? What was it? So looking back at that, and my piggyback to that, before you answer that, I just want everyone to hear 2008 was the end of the world. What we're going through right now seems like the end of the world. It's not the end of the world. It's just something that happens in your life, and there's always an opportunity that springs out of that problem. And I think Kevin's relationship with his wife was probably that great opportunity looking back at that. So when you're in the weeds and you're suffering, just think out there's got to be some kind of opportunity out there. So I think the opportunity for you to get that answer from your wife at the time, like you would have probably went, what the heck is that? But now you look back and she's right. It gave you strength, made you figure it out. So give me some tips on what you did wrong and what you avoided on your next real estate ventures.
Yeah. So I will be honest to say that I not necessarily stuck my head in the sand, but the last thing I wanted to think about was, real estate. And I didn't really have a moment of self-reflection until a couple of years after, to where I really said, what the heck would I have done differently? What went wrong? It's really hard to step outside that bubble when it's seemingly everyone around you is having the same challenges you're having. Like all the friends I knew down here in Florida, like guys that were way smarter than I, guys that had been through a few cycles before, were getting crushed. And it seemed like their world was ending, mine was ending. And so again, I didn't really have that moment of self-reflection until a few years later. But the one big thing that I identified, which was fairly obvious when I stepped out of this bubble, was most of our emphasis was on single family investments, single family rental properties. A couple things. Number one, we were spread out amongst multiple different counties. So we had a lot of inefficiencies with our management and our maintenance and repair. We just had, handymen and maintenance crews running from home to home. And sometimes these homes were 30 minutes apart from one another. Just lots of inefficiencies that exist there. In addition to that, there's a couple other factors that kind of played into it. I like to say that everything we bought for cash flow purposes. However, there was times that we would find ourselves buying homes just because we were buying them at 60 cents or 65 cents in the dollar, but we weren't being really honest with ourselves about, will those things support themselves from a cash flow perspective? We were saying, how can we not buy this? We're buying it at 60 cents in the dollar. How can we not lose, right? Especially when we pair it with the rest of our portfolio, how can we not lose when we blend it together, right? And so I think there was a lot of times we were just dishonest with ourselves as to, were we really buying cash flow assets, or were we buying strictly for the appreciation that really only matters on paper, right? Like that's not spendable money at that point in time. So that was one of the big mistakes. Another one of the mistakes were the type of debt that we're putting on these properties. So what we would typically do is buy anywhere between 6 to 10 properties with private money, local investors that we had relationships with, use their IRA money, what have you. And then we would wait, and then we would, get a 10 or 12, what have you, and then get a commercial loan and basically consolidate and cross collateralize those 10 or 12 properties. The challenge with that is once you go that commercial route, that debt is not nearly as attractive as a normal 30-year fixed mortgage. Typically, we're getting 20-year amortizations, 5-year either resets or 5-year balloons, and lots of other caveats that come with commercial loans that don't exist in regular residential loans. And so we found ourselves with, much higher debt service. We found ourselves in situations where we had debt coming due, we had loans coming due right around the time when all this crap was going down and getting really ugly. And so it was just like a perfect storm to where, we need to recapitalize. We saw things kind of changing. Banks were starting to freeze up. We went into a mode of trying to fire sale these properties. We had a very low leverage point across the board when this thing started. And we were like chasing a falling knife. It was crazy. Like we would say, well, we're willing to sell these things at 85 cents in a dollar, which 4 months prior to that, they would have flown off the shelves. Okay, let's drop it to 80 cents a dollar, 75 cents a dollar, 60. I mean, like literally we kept chasing it, and we sold a good bit, but we didn't nearly make a dent, in our portfolio prior to truly the bottom falling out. So it was just, it happened so quickly that we weren't able to essentially get to a stable point or get to a solid foundation before the floor completely fell out. So I would say that we had apartment complexes at that same time. And although the apartment complexes supported themselves, and we had vacancies, everyone had vacancies here in Florida. It's just, when I think the big struggle I have, guys, with where we're at in this market here today, I see a lot of promotion happening out there to where folks are very confident in saying that rents basically never go down, right? Like making projections that rents only go up. I can promise you that one of the big things that happened to us is that this might be an isolated incident to Florida. One of the big things that was happening in Florida at that time, there was a lot of spec built homes happening. So like there was rooftops being built in Southwest Florida for thousands of rooftops, brand new 322, brand new 422 homes for populations that weren't coming here. And what happened is you had this oversupply. And so those homes weren't selling. And guess what those developers had to start doing? They had to start renting these homes out instead of selling them. And they were basically renting for whatever they could get. And that created like this mass exodus from our properties, right? People now had an option to, do I rent this 25-year-old home for $895 a month, or I rent this brand new 322 for $100 more a month? And guess where, what the decision was? They rented that brand new 322. And so we had to start making concessions. I mean, in order to attract people, we make concessions to our monthly rents. We're knocking $100 off of, free month or two moving in. We give away flat screen TVs, whatever we need to do to get them in there. So that was another big nail in the coffin, was just the requirement having to give concessions and have this. We had a much larger vacancy rate than what we had the year prior. So it was just a lot of factors involved there that kind of, again, created that perfect storm that just absolutely crushed us. So it was just a very challenging time all the way around.
So I want everyone to write this down because this is really important. I'm going to sum up what Kevin said. First bullet point is take your head out of the sand. You have to just think it head on, and don't avoid it. And that, whether that's relationship with your employees, relationship with what's going on in the market, live with the reality and hit the problem head on. Number two is investing versus speculation. Know what you're doing. It's okay to speculate, but just understand that if you're buying Apple stock at 300 with no dividend and you're expecting it to go to 320, that's speculation because there's no dividend yield. There's no cash flow there. That's really important, right? Number three, stress test. Really important to see if you can buy a property, and if the property rents go down 20%, can you still pay the mortgage? Don't always just assume that rents are going up 5% for the next 10 years. Number four, the inefficiencies with his model. Is your model having an inefficiency in it? If you have single family homes and they're all within the same neighborhood, that's pretty efficient. They're all 322s, like Kevin said, 3-bedroom, 2-bath with the 2-car garage, and they're all the same. It's a lot easier to manage that because you can send the maintenance tech out. He knows where everything is. When you're spread out and thin out like that, it costs more to manage that, and it's much more inefficient. So take heed of that. Number five, the type of debt is truly important also. We talk about the 3 pillars of real estate. I'm not going to get into that much more business, Jewel. I know we're going to get back into the family, but it's really important. The type of debt is important. Cross-collateralization. Look up what that means. And if you can get long-term fixed rate financing right now, I think it's really important. Now, what's going on with Florida right now is really unique as it was 15 years ago. People are moving here, and we're getting a big amount of influx in St. Johns County. So we're getting a lot of demand. And I think what's going to happen is people are going to continue to come down here. As it was maybe 15 years ago, they weren't ready. Florida today is not the Florida of 15 years ago. It's a completely different ball game. Yeah. There's much more money. The jobs in Jacksonville is between Amazon, insurance, you have the ports being dredged, you have the Navy, you have military here, you have banks, you have all types of jobs coming down here, and they're going to continue to come down because of what's going on with the policy of taxation and all that. So there's a lot of different factors. Now, is it going to be rosy? I think it might be, but rents aren't going to continue to accumulate. So stress test that. So really important. So guys, write all those down, go back and listen to those, because that's how you're going to have to start buying properties from today going forward.
Mm-hmm.
What you got, Jewel?
I think you did great summing that up.
I mean, I know she's. It's like watching paint dry for her. I know it's killing her. She's like, okay, let's get back to the food.
It's just
no.
Yeah.
You got the complementary brain to mine, because my brain's like scattered all over. You just take all those pieces of the puzzle, put them together nice and neat. So great job.
Well, you have to, because you know why? Because everything you said there was from wisdom and was from experience. And maybe somebody listening to this might heed it, but maybe they have to go through it. But as they're going through it, they can see it, and maybe they can pivot, right? Because it's hard. My father always said, I don't want you to make mistakes. But if you don't make mistakes in life, you don't truly learn. You can learn from others' mistakes, right? But I think if you can make a mistake yourself, but you'll experience it, and you'll identify it a lot quicker. Like cross collateralizing, everyone's like, yeah, we put these loans together, but what happens when things go bad and 3 properties are good, but that one property is bad? That one property is going to pull down the other 3. So just know that as part of your exit strategy. There's nothing wrong with that strategy, but maybe this part of the cycle, it might be a little bit more risky as it was 5 years ago. That's all I'm just trying to convey to the investors.
And you know what I noticed when you guys were talking is, I watched my husband too go through really difficult times, when the market wasn't as good and all. Made some mistakes. And so you have the other end is, who's the spouse at home and how are we supporting you? And that's so important because, it could go either way. I could make life worse for you all, very easily, or I could do the opposite and really be there for you, be supportive, ask you questions. How can I help? What can I do for you? Because that's so important when you guys are out working. And I'm speaking for myself here. When you guys are out working, I'm home with the kids. I know what's going on. I can see it in your face when you come home. And so that's so important. So I'm asking you, Kevin, how has your wife supported you all these years through those struggles, through those ups and downs?
Yeah. It's interesting that you say that. You can see it on his face when he comes home. And my personality type is that I try to, I don't purposely try to keep everything in, but I don't want to add any undue stress to her or to the family. And I know she can handle it, but it's just my personality type. It is what it is.
We want to help you though. Women want to help you guys.
I know. And she can read it. So there's no hiding it. And we've gone through some tough times over the last couple of years with different situations. And so I'm going to circle back and tell a quick story, related to, the crash and her and how this all kind of came together and just really the, support mechanism that she became. The funny part is she doesn't really even remember this event happening, but it is, I mean, wide and clear in my brain each and every day. But this is about 7 months into everything unraveling. And so we were together, again, just really working on our relationship and having a great time. Well, having a great time together, aside from me personally, every night I'm like, oh God, everything else is going wrong. It's the only thing that's going right. But we were enjoying our time together. We were having breakfast one morning. I think it was a Saturday morning, and across the street there was a car wash. It was like $12 or $14 car wash, and I said, okay, I'm gonna drop my truck off, get it washed, and we'll go get some breakfast and walk back over. And at that point in time, what had kind of transpired is, as soon as I started defaulting on all my loans, all my creditors, so I never defaulted on a credit card and no consumer debt whatsoever, never could miss a payment. The only thing I did miss were all the loan payments. However, all those other creditors started seeing the signs, like Kevin's in financial distress. Let's shut off his credit lines. And so every creditor, with the exception of, I think, Discover card, I think everyone wiped out all my available credit. They completely took it away from me. I think Discover left me with like $500 available credit, which is basically nothing. Yeah. And so it came to the point where I was living on a debit card. Whatever I had in cash, that was it. What was in my bank is what I had. And so I walked across the street to pick up the truck, and I, again, $12 or $14, I don't remember the exact amount. I went to use my debit card. I knew there was money in there. It's cash. This is real. The guy's like, sorry, bud, it's declined or whatever. I'm like, well, I know that's not possible. Like there is money in there. So I called the bank, and basically it was like negative $300 some odd dollars. One of the creditors had come in and garnished my personal bank account. And I looked at her, I'm like, kind of joking, like embarrassed, but joking, like, hey, get your credit card on you, hon. You're gonna have to pay for this car wash. And that was when it got really real for me. And but for her, and again, the funny part is, like, we've never really sat down and talked about this moment, although I've told the story many times. I would love to really know what went through her head, because what went through my head is like, this guy's a deadbeat. I can't believe she's sticking around. Like, this is the perfect time for her to get out. Because now this guy is not just losing everything, but he's truly broke. He really doesn't have a dime to his name. In fact, he's negative, a lot of money. And simply put, she didn't say at the time, but what she, presented to me was, we'll work through it. Like, we'll get through this, whatever it is, what it is, you'll figure it out. You'll figure it out and things will move on. And so that was kind of the point I knew that, like, she was it. And I mean, like, for someone to stick around that had an out, she had the ability to get on with her life at that point and go find a non-deadbeat guy that actually could support himself and be the man of a relationship. And I just knew that was the point that I had found the one I wanted to be with, for a long time, the one that really was like my other half. And so anyway, I wanted to share that story because it's really it was a pivotal moment of that very bad time in my life, to where, like, at least I knew there was one really good thing there, and one that was going to stick around for a long time to come. So
when you originally said that she had said, you'll figure it out, the first thought I had was that she obviously had trust in you. And that's so important in a relationship, because she knew that you would, she knew that you would, get through your tough times, and you were smart enough and you had the work ethic to get through it. So maybe this is a great conversation you'll have tonight.
Yeah, no, I'm actually gonna. It's funny. I told you guys that I'm not in my office today. I'm working from home, and she's actually she's somewhere in her office in the house, and so I never have the opportunity to get out of these calls when I tell that story to actually go have a conversation with her. I'm pretty sure I'm going to do that.
I'm excited to hear about it.
Wow. She threw me off. My question was, you can't pay for the damn car wash. You probably can't pay for breakfast, right? What were the next steps you took, other than the pity party and being really probably pissed off at yourself? I'm an idiot, because I felt like that. I've never been that bad, Kevin. I'm going to tell you, you beat me. I've never gone that low, right? But what motivated you? What were the next steps that you took to say, okay, I'm going to take this over. I've got my mistakes. How did you proceed from there?
Yeah, so I'm going to tell you what I wish I would have done, and I'll go ahead and answer your question. So what I wish I would have done is, we all know, the old adage, buy low, sell high, right? What I should have done is I should have got my act back together right then and there, and actually went and capitalized on all the opportunities that were flooding the market at that point in time, right? All the great distressed deals. I mean, that's what we all know that, right? We're all trained with that notion to buy low, sell high, and you want to be buying when there's blood in the streets. It's just really hard to think that way when it's your blood that's in the street, right? So what I did do is I said, I want to focus on me. I want to focus on everything that's not real estate related. And the only thing I knew I could control at that point in my life was how I felt, like my health and my well-being and fitness, what have you. And so I got really focused on that, my health and fitness. And my wife was a runner when I met her. She was incredibly healthy and active. And I was as well, but not nearly as much as her. And so I really focused on feeling good. And, eating really, really well, became a vegan for a period of time, just experiment with a lot of things just to really keep my mind and my body in tip top shape. Aside from that, I wanted to start a business, or, businesses that were non-real estate related, that got me closer to what I enjoy doing. Right. And again, this was my way of sticking my head in the sand, but also hopefully providing enough money to keep a roof over my head and to, be a supporter in our relationship. And so what I did during this health and fitness stage of my life, and I still very active, do a lot of cycling, a lot of running, what have you. So that just didn't go away after all this got better. But I started two businesses. One was called My Race Frags, and basically it was a printing business. It came about at an idea that we had when we ran the Chicago Marathon together in 2009. And basically we started a printing company that catered towards cycling teams and also very large running teams and nonprofit organizations. So think about like those that run the Chicago Marathon, New York Marathon, they all have, shirts, what have you. Anyway, we created a printing business, and that allowed me to get closer to that running community that I became to love over this period of time. I became a huge runner, did a lot of races. And so it allowed me to make money, but also being much more involved and intertwined in a sport that I really thoroughly enjoyed, being around. The other business, this is kind of funny. Everyone always gets a little giggle when I tell them about this business. So I love craft beer. And when I moved in with my wife, well, she wasn't my wife at that time. We moved in together, I think in 2009. So during all these bad times that were happening, and there was a brewery down the road from our house, and I love craft brew, but she would never go with me. She didn't like going to the brewery. She didn't like sitting there and having the beer. She just didn't like the environment. And I loved it. And so I would never go. I'm not the guy that goes sits at a bar by myself. It's not me. And so I said, you know what? I'm going to start a run club, honey. And I'm going to call it Running for Brews. This is back when meetup.com was just getting its launching pad. And I had used it for a few other things. And I was always very impressed with their platform. So I said, I'm going to start a running club called Running for Brews on meetup.com. And then we're going to do it at the brewery, down the street. I'm going to do it once a week. We're going to run a 5K, and I'm going to hang out with other people that want to drink beer and also go for a run. She's like, that's the stupidest idea I've ever heard. I remember that. So
I thought that was great. I'm like, dude, I wish I'd have thought of that.
And I started the funny thing is I started the page, and I started it for like 3 months out, and I set it to where the alerts, whenever like a member would join an RSVP, it would give me a ding on my phone. And I remember over the next couple of weeks, ding, I'm like, look, someone else joined, someone else is coming. I think we had like 20 people at the first meetup. Anyway, that business turned into something where we have 50 locations across the country now. I'm no longer involved in it. Basically, we monetized the ability to go into a restaurant's slowest night, ask what their slowest night is, and essentially bring anywhere between 20 and some of our clubs get 100 plus runners on that one night. Yeah, and the bar basically pays us to bring them there. They also give us discounts on drinks and food and things like that. So we basically we just fill their slowest night of the week. In turn, they offer the benefit of paying us a certain amount of revenue for what they bring in through the door. We all have fun doing it. I get to drink my craft beer on a weekly basis, and everyone's happy because we also got a 5K running on top of it. So we basically burn the calories that we drink.
Yeah, the sky's the limit, though, because if anybody knows anything about community and about getting together, now from that perspective, you've got 100 people running and drinking beer. And oh, by the way, I'm in real estate. I buy mobile home parks. You guys think about investing? I mean, the sky is the limit with that model. I think it's awesome, dude. I love that idea.
Yeah. Well, I think it's interesting that you started 2 companies with negative money too.
Yeah. So those are bootstrapped. I mean, there was the printing company. We bought about a $1,400 printer, which Joanna bought. I didn't buy it because I didn't have the money. And
someone has the money, right? Isn't that how it goes?
Yes.
Yeah.
Saw a couple free videos on YouTube of how to hire full-time workers in the Philippines. Watched as many YouTube videos as I could. Went and hired a 3-person staff in the Philippines. I never built a website. Didn't know anything about SEO. Basically built a team and created 2 businesses that generated revenue. They didn't kill it. I didn't crush the world with the amount of revenue they had created, but they allowed me to have fun, to really shift my focus from, again, all the things that were happening with the real estate to something I was enjoying doing. I've met a ton of friends through it, met some great business partners along the way, and so I mean, she was supportive. The craziest thing is that I think she knew that those businesses weren't going to be something that got me back to the place where I was, when I met her. But she knew that it was my way of working through those challenging times. And, and she never once ever said, other than the Running for Brews idea, it wasn't necessarily the idea. It was just kind of no one's going to go run and drink beer, right? Like it didn't really register with her.
For beer.
You would be surprised.
If it was wine, I bet you she would be okay with it.
That's exactly what she said.
Yeah.
That's exactly what she said. If they serve wine, I would go. Or it's a brewery.
I like beer.
Wow.
But no, she was there and she was supportive and never once said, just, that's dumb, go get a job.
Yeah.
Which she actually probably should have at some point told me to go get a job, because this is a period of a couple of years, about 2011, when I said, you know what, I miss real estate. I really, that fire was still burning. And I kind of kicked myself in the butt a little bit for not getting my butt back in gear and buying some opportunities, and just really pull my head out of the sand, and again had fun with the other businesses, made some money. But
when was it when you actually transferred? Okay.
So 2011, I put my mind back in gear, and at a random lunch I had, this is how I got into mobile home parks. A random lunch I had with a mutual friend. he introduced me to this guy named Randy, and he said, go over and have lunch with Randy. Randy's a great guy. He's a banker for 30 years. You guys might find something in common. That was it. Randy happened to own 3 mobile home parks. I had never considered mobile home parks in my life. Randy retired from banking and bought 3 mobile home parks in Florida. During that lunch meeting, I basically was, Randy's kind of asking, what are you going to do next? What's your next step in this real estate, the rebuilding of your real estate business? I said, well, I know it's not going to be single family homes, but I know it's going to be multifamily, because multifamily, the properties I had, they worked really well, and they didn't have all the inefficiencies of my single family portfolio. I just wish I would have shifted my focus back then. And I know that was part of the mistake. So moving forward, it's going to be multifamily properties. And he essentially went on to say, well, let me tell you all the reasons why mobile home parks are better. Anyway, he went into like this whole sales pitch of trying to put me down and put multifamily down. And I love multifamily as well. So, and I still own some today. But in any event, that kind of intrigued and piqued my interest in the mobile home park space. And it took me about a year, of studying and learning as much as I could. You couldn't buy too many books on that topic back then. And basically committed to myself, I want to buy a mobile home park the next year and either prove or disprove what Randy had said. Is this a good business or bad business? And it took me 14 months. So it took me a little bit longer than I had anticipated. Bought the first park. We still own that one today. It's up in Atlanta. Had maintained a few relationships with a few of our private lenders. Majority of them we had back in the single family days. Talked one of them into basically being the lender on this highly distressed REO. Mobile home park, and got him on board with that idea. So he was where the funding came from for it. We turned that thing around. Literally, I drove to Atlanta every week for 8 months straight, which is an 8-hour drive from Tampa, to spend 2 days every week up there running crews, renovating things, and that was my one chance I felt to make things right. And that was the opportunity I felt was like this new launching pad to do bigger things and to really get myself back to where, I was in the real estate business and real estate was working for me and it wasn't bringing me down anymore. And that's what happened. It's through blood, sweat, and tears, we turned that place around and got it stabilized. Again, it's in our portfolio today. It's a great cash producer. It allowed me to prove the concept, which I think is important for everyone that's getting started, is to truly focus on that very first property and make sure that it's a home run, knock it out of the park, and prove your concept, so that you have a story to tell when you go out and pitch to investors, pitch to partners about what it is you want to do in the business that you want to grow or you want to scale. Now you've got real proof of it, and that's essentially what we did. We use that as our pitch deck moving forward, and when continued to buy more parks. Got the confidence from a number of wealthy individuals to come on board as partners, and we slowly, one by one, built the business to where it is today. So
I love that.
Took many years. That was 2012 when we bought that park, late 2012.
Let's take a quick time out to hear from our sponsors.
Gino and I are super excited to tell you about the audiobook version of The Honeybee, which was recently released.
The Honeybee tells the story of Noah, a disappointed, disaffected salesman who feels like his life is going nowhere until the day he has a chance encounter with a man named Tom Barnum, the beekeeper. In his charming, down-home way, Tom, the bee man, teaches Noah and his wife Emma how to grow their personal wealth using the lessons he learned from his beekeeping passion.
In the audio version, Gino and I sat down for an exclusive interview after each chapter where we elaborate on the stings we felt throughout the business, the importance of scaling up, and how we've been able to create multiple streams of revenue.
For more information and to get your copy of the audiobook, visit jakeandgino.com/honeybee. Now, Kevin, that's 2012.
Mm-hmm.
One word that to me that I wrote down, I just keep thinking about it. The word groupthink. And a lot of that's going on right now in the market itself as you scaled up. Now everyone's in mobile home parks. I mean, you were buying probably 10, 11 caps. Where do you see the risk now? I mean, I think groupthink is in every sector of our economy, whether it's the media, whether it's the CDC, whether it's government, whether it's real estate, everyone has this idea and there's very few people. I read the book by Sam Zell. I think everyone should read the book from Sam Zell. I forgot what the name of the book was. gosh, it was such an,
His most recent book?
yeah. Gosh, what is it?
I've got it.
I just finished reading it. I love it because it's all about being a contrarian. Now, maybe you don't have to be as much of a contrarian as he is and go completely against the grain, because I think the last couple of years he's probably lost out on a lot of opportunities from being a contrarian because the market continues to elevate and this cycle is completely different. But where do you see the risk in as far as group thinking, as far as what's going on in your sector?
In mobile home parks? No, there's been a lot of new activity over the last 2 years. Have been a 180-degree turn as far as active buyers of space. Lots of private equity, lots of institutional investors coming in, and we have a limited supply. So there is very little to no supply, new supply coming in the market. Everyone's fighting for the same assets. And over the last 2 years, a large percentage of those assets have been consolidated by either smaller groups like ourselves or larger institutional or private equity firms. And so where I see the risk in our space, one of the things that I'm somewhat envious of in the multifamily space is the ability to basically be on the investment and asset management side and know that there are options out there on the PM side, meaning that if you don't want to ultimately build your own property management company, you have options. And this is assuming that you're in a decent sized market, right? And there's more than just one local property management company. You have options to where you don't have to build that separate business. In our space, that doesn't exist. There are a handful of property management companies in our space, and we've had personal experience with the biggest and best in class, and it's a very antiquated dinosaur model. So there's a lot of moving pieces in our business. And so when you're getting into our space, you can go out and be an individual and buy one park, and you can be the property manager, you can kind of run it. And then you can go buy a second one. Your bandwidth's starting to get smaller and smaller. You can buy a third one and smaller and smaller. And so you have to make a decision at that point in time. If I'm going to buy that fourth park, I'm going to have to, I'm out of time. I'm out of time and energy. And my wife hates me because I'm not home anymore, right? So you got to make a decision. Do I build a property management company and staff basically a business that's probably going to lose money for a period of time because I don't have enough scale? And so you have to play the simultaneous game of building a property management company that's not profitable while you're building your investment business. It's very hard to build two businesses simultaneously. Again, we went through this challenge ourselves. We actually outsourced a number of our properties last year to the biggest and best. And it barely lasted a year. We brought it all back in. We had doubled the size over that period of time. We brought it back in, and it was very messy. And we realized very quickly that that wasn't even a viable option, not even remotely close. So for that person that's going through that growth stage, they're going to hit a lot of hiccups. And I think that that's where a big risk lies: is buying very thin margins and not really counting on the fact that you're going to have to build out a property management company that's probably going to take capital. You're going to have to be injecting capital on a regular basis in order, before you get to a certain scale. In addition to that, I think some of the other, some regulatory risks that are in our space that I didn't feel really existed so much 2 years ago. For example, New York just passed the most restrictive rent control in the country. And it also is applicable to mobile home parks. So we own parks up in New York. And it is so restrictive that we are literally selling our parks in New York. I mean, we're getting out of the state. It just doesn't make sense to stay there. There have been some players in our industry that have gone in and made headline news across the country, different states that were very much red states, that now there's bills on the docket for different variations of rent control in mobile home parks. And so I think that, and it's getting a lot of attention across the country. So I think that there's a lot of regulatory risk in our industry. Iowa's the one that comes to mind right now. And Iowa is very much a swing state, but there's a bill proposed regarding rent control. And I forget all the intricate details of it, but it's fairly restrictive. And there's a group that came into Iowa, I think into Cedar Falls and to Des Moines about a year ago. And they came in and raised rents they bought 4 large parks, and they raised rents, I think, about 80%, literally over a period of like a month. I mean, just came in and just slapped everyone with a huge rent increase because they could. And there's multiple advocacy groups that are fighting, for the tenants in our industry, as they should. But so I think that's a really big risk. I think one of the other risks I see, Gino, and so not to keep drawing on here, but one of the other big risks I see is that, brokers' opinion on how this park's going to operate. And this is no different in our industry versus your industry and every other industry, but brokers' opinion on how this property is going to operate, what that pro forma looks like, and on the offering memorandum, the pretty nice packet that gets put out, to what's realistic. As far as once I get my hands dirty. And in our industry, what I have found is that, and I think you guys have dealt with some mom and pop apartments. I remember your story of that first apartment complex you bought, of how horrific the records were, and just very interesting tenant base, and you guys, I think you went through a pretty big turn on that one. That exists a lot in our space as well. When you're buying these properties from these mom and pops that have been running them basically on handshakes, not keeping a lot of documented records, collecting cash, what have you. What happens when you go into these properties is you end up having a pretty significant turn. You end up losing a significant amount of folks that, number one, can't adopt new rules. Number two, aren't going to get the break anymore. They can pay, 30 days late or miss a month every year and be, the owner be okay with it. Or they can't have their pit bull any longer, what have you. So there's lots of, every time we buy a park, we pretty much expect that we're going to lose somewhere between 10 and 50% of the residents. This is going to happen. Even in parks that we think are stable going into them, we know that there's going to be slow adaptation of our new rules and regulations. And, people that have been used to something for 30 plus years with that old owner that owned that park since it was new aren't going to be able to jive with our way of doing things. And they're going to move on and go somewhere else. So again, not to draw on of where I think the risks are, but I think there's a litany of them. Anyway, those are some of the biggest ones I feel.
So you have 2 young kids.
That's correct.
My father would say to me, hey, that's your future employees. Maybe they can work for the property management company, right? I mean, that's how we think as Italians, right? Get the family working. But I want to know from you, and your kids are little right now, but how do you envision them as far as do you want them to work in the business with you? Do you want them to go to college? Do you want them to love what they want to love? Everyone has their own opinion. I love my children for working with me because they work for someone. Jake and Gino, some sell swag at the events. My son is talking to investors. The whole 9 yards. I want them to know what the entrepreneurial lifestyle is. I want them to.
Well, it's good to introduce it, but then at the same time, we want something for our kids, but it's what they want initially.
That's it.
Yeah.
Yes.
It's hard.
Yeah, I feel the same way. I mean, I absolutely love being around my boys, right? And I would love for them to follow that path. And I surely won't force it on them. I will introduce them to the to the business, and when they're old enough to understand what that means. Whether they go to school or not, it's going to be their choice. We're going to give them all the options. Propose them what we feel to be the pros and cons, and let them ultimately make their own decisions. But I love being around my family. Everything that I do is to be able to spend more time with them, and so I think it would be awesome. I would absolutely love that. So I hope it plays out that way, but only time will tell.
So do I. So last question: where do you see yourself in 5 years? Where do you see? Do you continue in mobile home park? Yeah. Do you see maybe a future venture with your wife? I mean, where do you see yourself?
Yeah, that's a great question. So it's one that's pretty relevant to the time today. We're going to stick with mobile home parks. We really love the niche, love everything about it. We're going to be, continue to be methodical and slow with our buying decisions. Things have gotten a lot tighter over the last couple of years. So last year we bought way less parks than the prior year, and I'm not sure exactly how this year will play out. We'll buy what makes sense and steer away from what doesn't make sense. However, there's one asset class over the past year that we've been secretly behind the scenes studying that has been intriguing to me for a number of years. And so this next fund, we're about to roll out our third fund. This next fund is ultimately going to be a hybrid offering. It's going to be mobile home parks, but also surface parking lots and also parking garages and CBDs. And it's been a space that, again, has been very intriguing to us. It's a very fragmented niche, and it's very contrarian, which mobile home parks were as well many years back when we got into it. And so we've got our first 2 parking lots in contract right now, and phenomenal downtown CBD districts, great cities, and so we're going to merge the 2 together. They have a lot of similarities basically we're renting land.
Yeah.
And ultimately, the play there with the parking lots is there's some phenomenal, at the right price, as with anything, buying them at the right price. There's some phenomenal cash flow plays that can be had, very stable, triple net type lease arrangements with professional operators. And then, which we are not projecting, but is icing on the cake, would be the future development opportunity.
Yes.
We're not underwriting that. We're not factoring that in. It's hopefully when that time comes, that will be icing on the cake, and everyone will be jumping up and down because now it's worth even more as a redevelopment play.
Yeah,
so
that's awesome.
So we're super excited about that.
Great, I love that. Jewel, recap it for me.
I my recap is going to be different than yours.
It always is.
Yeah.
Mine's gonna be talking about parking lots,
Yeah.
and I got to get you in touch with Jake. That's what my recap's gonna be. But we'll hear your recap.
I do
first.
love your story that you worked hard, you were successful, and then everything collapsed, and you had the support you needed at the time, and she had faith in you. And I love to hear that because you took that and you worked at it and you made it to where you are now. And it's so important that everyone knows that support at home is so crucial to be successful in life. We could make as much as you, doesn't matter how much you make, but if you don't have that support at home, really, what's the point? So just, cherish each other, thank each other.
Yes.
Tell your wife what you think of her. Tell her how she helped you, because we need to hear that. Both sides. We all need to hear that.
So my recap.
Was that different?
No. I'll make my recap short. I think you just have to be clear on what you want. I mean, and don't be afraid. And please don't do what Kevin and I did a little bit. Don't put your head in the sand and don't be afraid to get back in. And I heard the word passion in there.
Mm-hmm.
He hadn't said passion about anything but real estate.
Mm-hmm.
And when he was doing those other businesses, it's not like craft beer and real estate are his two passions, right? And fitness, right? So really gravitate towards what your passion is. There's a burning desire. There's something missing in his life. So don't be afraid to go back. And I think that's awesome. I think it was an awesome story.
Yeah,
Kevin, where can the listeners get a hold of you?
You can find me on my website, kevinbupp.com. You can also find links to our company website and the different podcasts and things of that nature at that same website. So kevinbupp.com is the best place to track me down.
Mm-hmm. Awesome.
I just want to thank you for taking the time today to share your story. You're moving out of your office, a lot of things happening. Continued success.
Yeah.
I wish you a lot of success with the parking lot. I think you're doing a great job with that. So once again, thanks for being on the show.
Thank you, Kevin.
Thanks for having me, guys. It's been a lot of fun. Appreciate all you do for the community.
Thanks. Take care.